So, India's central bank, the Reserve Bank of India, just dropped a bombshell that's got the entire financial world talking. Let's get right into it and break down exactly what happened, and more importantly, what it means for the economy.
All right, here's the magic number, 5.25%. That is the new key interest rate. The RBI just cut it by 25 basis points. Now, this is a big deal because it ends the recent pause, and it keeps one of the most aggressive rate-cutting cycles we've seen in a while going strong. Okay, but this is where it gets a little confusing, right? We keep hearing that the economy is doing great, that growth is strong. So why on earth is the central bank cutting rates? I mean, isn't that something you do to kickstart a slowing economy? What's the real story here?
Well, to really get what the RBI is thinking, you have to understand the unique spot India's economy is in right now. A lot of people are calling it a Goldilocks moment.
So what on earth is a Goldilocks economy? Well, think about the story. It's that sweet spot, that perfect middle ground. The economy is growing, but not so fast that it causes crazy inflation. And inflation is low, but not so low that it signals a recession. It's, just right.
And believe it or not, that's pretty much what's happening in India. You've got these two massive forces at play. On one hand, you have incredibly strong economic growth, and on the other, you have surprisingly low inflation. It's this super rare combination that gave the RBI the perfect window to make its move. And check this out. These are the RBI's own numbers. They've actually bumped up their GDP growth forecast for the fiscal year to a seriously healthy level. You can see that right there. But then you look over at inflation, and they're expecting it to stay incredibly low, well within their comfort zone.
And hey, don't just take my word for it. The RBI governor himself, Sanjay Malhotra, used this exact phrase. He called it a rare Goldilocks period, basically confirming that this is exactly how the central bank sees the situation. It's their main justification for the rate cut.
Now, this latest cut, it's not happening in a vacuum. It's just the latest step in a much bigger trend. In total, the RBI has slashed rates by 125 basis points this year alone. That's a full 1.25%. It's a clear signal they're committed to a policy of making money cheaper to borrow. Okay, so cutting interest rates is one thing, but it's only half the story. For that engine to really roar, you need to make sure there's enough fuel, or in this case cash, flowing through the system. And that's exactly what the RBI is focused on next.
So the banking system has actually had a good amount of cash or liquidity floating around, but the RBI is thinking ahead. They're not waiting for a problem to pop up, they're taking action now to make sure that money keeps moving smoothly to where it needs to go. So, what's their game plan? Well, the RBI has announced a two-pronged attack to boost that cash flow. They're pulling out two big tools from their toolkit, something called open market operations, or OMOs, and currency swaps. Let's make this super simple. First, with OMOs, the RBI is basically going to buy a whole bunch of government bonds from banks, so it's like the central bank is handing commercial banks a big pile of cash. Second, they're doing a $5 billion currency swap, which is just another clever way to push more rupees into the financial system.
All right, so the RBI cuts rates and promises to pump more cash into the system. The billion-dollar question, of course, is how did the markets take the news?
Well, the reaction was pretty much instant, and it was good, really good. India's main stock index, the Sensex, had been on a 4-day losing streak, and boom, it just shot right up. It was a crystal clear sign that investors absolutely loved what they heard.
But hold on a second. Was it just the RBI's move that sent the market soaring? Or was there maybe something else going on that helped things along?
Turns out, it was basically a perfect storm of good news. You had the RBI's big move, of course. But then, you also got some good news on inflation coming out of the US, which got global markets excited. On top of that, foreign investors started pouring money back into India, and the rupee got stronger. It was like everything lined up just right.
Okay, so that's the big picture stuff. The economy, the markets. But let's bring this home. What does any of this actually mean for you and your wallet?
The one big takeaway here, the phrase you're going to hear a lot, is lower for longer. The RBI is basically sending a huge signal that low interest rates aren't just a blip on the radar. They're here to stay for a while. This is a real policy shift.
And that right there leads us to the final and maybe most important question. This whole lower for longer thing, it's going to have a real impact. It could mean your car loan or your mortgage gets cheaper. But on the flip side, the interest you earn on your savings, that could go down. So the big question to leave you with is, how is this going to change the way you manage your money?
And that's our breakdown of the RBI's big move. If this explainer helped you make sense of it all, do us a favor and hit that like button, share it with your network, and definitely subscribe for more insights. We'd really love to hear what you think about this lower for longer world, so drop your thoughts in the comments below. Thanks for tuning in.